Success in real estate investing requires balance, and achieving that balance often requires an engineered, technical approach to making the most of your time. Speaking of engineering, our guest for today's show leverages her professional skill set as a petroleum engineer to acquire and operate large multifamily properties. When I think of the technical skills that most engineers have, I think about process assessment, process management, and optimization. I think about scenario and cost analysis. These are all things that are needed and that are necessary for you to thrive as a deal maker in the commercial real estate space. So I want you to listen closely to this discussion as Anna Lee Tan shares her story of pushing through limited beliefs and overcoming adversity to living a life of abundance as a multifamily syndicator. All right, so here she is from SuiteLife Multifamily.
Are you a busy professional in the DMV area looking to invest passively in large multifamily syndication deals? Do you want to meet with other like-minded investors of all experience levels to learn, network, and discuss some amazing investment opportunities? Then look no further than the DMV Apartment Investor Community in-person meetups. Our monthly meetups offer a space for you to connect with other investors, learn from industry experts, and discover lucrative investment opportunities in large, multifamily syndication deals. Whether you're an experienced investor or just starting out, our community welcomes everyone who is interested in growing their wealth through passive investing. Join us at the DMV Apartment Investor Community Meetups and take your first step towards financial freedom today. Visit our website now to learn more and register for our next meetup. We'll see you there.
What would you do if you had the freedom to pursue the things you enjoy the most? How incredible would it feel to have the resources to pursue your passions fully and live life on your terms? This is Brandon Jenkins, host of the Capital Stack podcast and principal of Birch Prosper. You might have heard that 90% of the world's wealthiest people attribute their wealth to real estate investing. Well, guess what? It's true. Investing in real property continues to be the greatest generator of wealth all over the world. So join us each week on the Capital Stack podcast to hear about how commercial real estate group investment opportunities can help you reach true financial freedom and give you your time back. Hello, everyone. What's up? And welcome back to the Capital Stack. So we have a great show for you today. I have the honor of speaking with a fellow petroleum engineer turned real estate investor, although she is still in the oil patch, as we like to call it. Our guest for today is Anna Lee Tan. Anna, how are you doing today?
Doing wonderful, Brandon. Thank you for having me.
Absolutely. Thank you so much for being here. So Anna is a co-founder and principal of SuiteLife Multifamily, a firm whose mission it is to empower, educate, and provide wealth building opportunities for their community. I love that you and your husband, Peter, launched the firm as true partners in life and business. So I think that's awesome. Anna has invested and operated real estate for over 10 years with a recent focus in commercial real estate. And she's not playing around. So SuiteLife Multifamily has a portfolio of $100 million in assets under management. And so they're seeing the results of hard work and they're seeing real success in this business. So Anna, with that, welcome to the show. Why don't you kind of share just a little bit of detail about your background, your journey, and what got you to this space?
Absolutely. So my parents actually started in real estate, but they did it in a way that they knew or that they understand. And one of the cool things about real estate is it extends beyond all boundaries and cultures. Everyone understands you buy real estate, you own it, and you can make a pretty good living off of it, right? And so that was somewhat, I would say that was probably my first, how would you say it? My first indicator of real estate, kind of seeing what that could look like, but they only focused on single family homes or residential. And so that was more of the, buy a single family property, you buy it in cash, and then you make money off of the rent. And it's very small. It's not that considerable, but it's enough to over time in order for you to build your wealth and be able to buy the second property. But following that method takes quite a bit of time. And that's something that, because my parents were immigrants, we didn't really quite understand some of the debt structures, the opportunities from a borrowing money financial side of aspects. There's some other things that you can do in order for you to grow your real estate faster. And that's what we learned and why we wanted to jump into commercial real estate. And so single family homes, that was great because we were hands-on, but it took a lot longer to where we wanted to get to because of it. And recently when we jumped into real estate, that's when our eyes really opened to the possibilities of growing your real estate portfolio much more quickly. But of course, there's a little bit more risk to it because you're borrowing money, you're essentially broadening your business scope and your financial capabilities when doing that. But it's been a really great journey. And so right now, we still manage our single family home portfolio, but we also, I don't want to say on the side, but part of our time also extends to commercial real estate, where we're able to syndicate and bring in our network in our community to jump in on investment opportunities with us. In our journey, what we wanted to understand, or what we wanted to know, or what we always asked before was, how do we, we're so successful in our real estate or single family homes. How do we extend that to our friends and families? Like, we want them to be a part of the work that we're doing so that they can also be successful too. And that's why what we really liked about commercial real estate and syndicating.
Absolutely. Thank you so much for sharing your background there. And I think that I'm on that last point. One of the things that I enjoy about this business is the ability to make an impact, on the people that we love and we care about. You make an impact on the community, on the tenants, and certainly on yourselves as well. Being able to increase the velocity of your capital, kind of like what you were talking about there, is economies of scale, speed of capital, velocity of capital, being able to sort of leverage or take advantage of, really, in my opinion, once you scale up, you start to de-risk certain elements of the real estate business. And so I think that's very powerful, and also, I find that having exposure early on to, entrepreneurship in general, but certainly for this business, being able to see that early on and, in your parents, it kind of sets the stage a little bit for, this is something that is not like some, it's not a boogeyman. It's not something that it's like, if you invest in this, then you're going to lose it all and this kind of thing. And I think it certainly helps to have someone that you could say, oh yeah, they're doing this. This is a business, and it's and they're running it as a business, and it works. Because there are a lot of people who let that stop them. They hear about the stories where it didn't work. I mean, like anything else, there's no guarantees, but some people let that stop them. And so having that experience early on, I believe, is something that would greatly benefit you. Did you find that to where, it made it a little bit easier to conceptualize, oh yeah, this is real estate investing. Of course it works.
Well, I think for me, the fact that my parents were able to do it and come here with not understanding English or not knowing the language, not knowing the culture, and they were able to be successful in real estate and within their own business, it kind of, and for when I was a child, I took it for granted what they were able to do. And when I became older, that's really when we started doing real estate. When I became older, I appreciated that. Like, I was like, wow, they were able to basically have a business in real estate, able to do all these things, and they came over with nothing. And so if they were able to do that, and like, what can I do? Like, what should I be able to do? And so there's this inherent, I don't know, this inherent goal that maybe when I became a little older, I was like, man, I really need to look into this, because that wasn't something that my parents really talked about as much. It was just kind of like an understanding I observed from the background. But once I got into it, years later, like beginning when I first started, it was scary because you had less capital to, put into investment opportunities. Everyone's telling you should do this, you should do that, or don't do that. That's not a great idea. So you have all this information coming in, but as an adult or young adult, you have to filter out what would work for you, what's appropriate. And it's just a learning, it's a journey, and it doesn't matter at what age or how you're exposed to real estate. Fortunately for us, I had that early exposure, but it could have just stopped there. I could have just said like, oh, I saw it, I'm going to step away. But instead, I became curious and wanted to dig into a little bit deeper. And so far, that's been part of our journey.
Yeah, absolutely. I think that's a good point, because even though you saw it early on, you could have decided to go the opposite direction, and that happens sometime as well. So that's a great point. And so I want to talk too about the shift from single family to multifamily, because there's a lot of times in making that adjustment, that shift, it can be there's a lot of friction there. And I did the same thing myself. So I started off on the single family side and went over to the multifamily space. Part of the reason why I'm saying that can be friction is because you wear all the hats when you're a single family investor, and you run the show. And normally when you have things dialed in, it can be difficult to then step into a space where you have to start to offload or hand off some of the tasks that you took on yourself. And so it's not always easy. It's counterintuitive, because you would think that if you're wearing all the hats on one side, when you now have a team, it becomes easier to say, boy, I can, take a load off and kind of hand some of this out. But it's not always that easy. Sometimes you're like, well, this person's doing this in a way that I wouldn't, and so how was that transition for you? Did you find it, how did that go for you?
So I would say it's definitely a learning process. It's very different because you're so used to maybe doing almost everything yourself, and once you do it, it'll get done. In the commercial side, it's just so much bigger. So it's almost like coming from a very, very small business to working in corporate, is kind of my analogy. And when you're in corporate, it's just so many more hands. There's so many more things to consider, a lot more risks, regulations, and again, a lot more tenants, on the property too. So we're going from 1 to maybe 300, plus or minus. And so that change is very different, and it makes you think about things in a more maybe strategic level, like how can you really impact what the project, or you look at maybe the very high important things, like, okay, in my role, where are the needle movers? And I'm not going to be the person that's calling the AC guy to come out, right? Like that's my role in the big entire project is much more higher. It's more strategic. It's more impactful in a different way. And so it's really understanding roles and when you have to step in, and be a little bit more hands-on, or maybe be able to kind of step back once things get a little bit more stabilized. So it's a little bit of trying to feel out the rest of the team, the property management company, understanding the financials differently, because again, when you're a single family home, it's very, I would say, much more straightforward, much more simpler. The P&L is much more simpler. Commercial, it is commercial. It's more like corporate. You have a lot of different things going on. You're dealing with higher debt. You're dealing with lenders. So there's a lot more going on in that space, and it's different for sure.
Yeah, absolutely. One of the things that I like to share with people who have some single family experience and that are considering the shift is, usually on the single family side, you can sort of stop at cash flow. Once you get, your NOI, and then you back out your debt service, and then you're now at the cash flow line, you typically are going to focus heavily on that piece there. But once you start to get into commercial and certainly syndication, your concern is return to investors. So you have a few more steps that you have to take in order to analyze the deal. And a lot of times, those extra steps right there might kill the deal. Is it sure at the project level, cash flow might be strong, but what does it look like at the investor level? So even that gap right there, and that's aside from, like you said, all the P&L itself is very complicated, but even when you get down to that portion, just talking about the returns based on whatever the structure is, that can be super complicated as well. So there's something that in your mission, as I mentioned in the intro there, that for you it's about making an impact on friends and family in your community. The friends and family piece is interesting to me, because I find that it's almost like it's almost 50-50. Some people have a really good sort of solid base of friends and family to where they can, convey the concept and the idea, and everyone's on board, especially on, when it comes to contributing capital. But then on the other side, it maybe doesn't go as smoothly. And so what was your experience like? Did you have to actually, was it already pretty well understood because you maybe have a circle of people who are savvy investors, or did you have to do some educating and coaching to get them to warm up to the idea?
Definitely some educating and coaching. I think because we were doing single family, we were generating real estate for so long already, a lot of our circle already understood that, at least the tighter circle. But you are right, we did have to expand to that, including like our coworkers and our peers and that sort of group. But I think because of our work ethic within our specific companies, they were able to see that and translate as well. And so it was a mix of maybe hand-on-hand personal experience, or knowing that we've had been investing, doing real estate for so long that it was a little easier to discuss why we think this is a great opportunity and why we want them to be a part of our journey as well, and jump into the opportunities.
Yeah, absolutely, absolutely. I think that this is kind of it really is an education-based type of investment. We're talking about syndication, at least. And that's one thing that I would like to just say for the listeners as well, is that if you are someone who's either on the active side, or you're that's your goal, is you have to keep that in mind, is that it's education based, and so it's not one of those things where it's very where everyone is familiar with it and has done it. It doesn't get quite as much I don't know, notice or news or what have you, as say the stock market or something like that. And so you then do have to step in and say, okay, here's how it's done. Here's how we work. Here's how we identify markets. Here's the capital stack, and here's how it plays out for you as an investor, all these things.
Yeah. So let me kind of add a comment to that. So Peter told me about syndications probably 5 years before we actually jumped into our first one. And this is with us already having been familiar with real estate. And again, syndication is completely different in terms of, if you've never been a part of it, it's different. But it took us 5 years, and it wasn't because they were bad or wrong. It was just because I was unwilling at the time to really take time to understand what that opportunity looked like. I mean, I was like, life, and I'm like, we just had our first child. I'm like, I'm not ready to like, I just did not have the capacity to bring in something else, right? Just being a new parent for the first time. And so once I think it came to a certain point, I think it was with their second, I was like, oh, okay. I did not understand that. I didn't understand that there's a passive component to it, because we've, started to build capital. We've been working longer, and we didn't know what to do with our money. Like, I didn't, stocks were hot, but it was like, are you really going to put all your eggs in one basket? And I think for anyone, that's probably a terrible idea, right? Because, you want to, if you kind of look at Warren Buffett, like, he likes to have a diversified portfolio, and let's kind of learn from people that are more successful than us. And so, yeah, it took us a really long time before we jumped in, and no regrets after we did that. And so, again, part of that is educating. And when you're really open to the possibilities, you'll be surprised, at what's out there.
Yeah, I think so as well. I mean, it's interesting. The private entity or private investment landscape has expanded drastically. Like, I forgot what the number was. I'm gonna have to look it up, but I think in 2022, like the amount of capital that went to private investments, private offerings, was just incredibly substantial. I'm gonna look that up in a second, but it's just a really, really high number. So you're seeing this growth in terms of investor interest, capital that's being pushed into this market. So it definitely is worth, for listeners, it's certainly worthwhile to make sure you have an understanding of this space, because it just opens you can, precious metals, alternative types of investments. You have campgrounds, your multifamily. So all these things, storage, oil and gas, private investment. So, it's a huge world that that is available to you, once you kind of dig into it and make sure you understand the ins and outs. And so you mentioned something briefly there, that you said you had just, recently had a child at the time. And so, that kind of factored in as well. And so I'd like to actually talk about that. Right. So you're a busy professional, you're a mother of two, and you operate two companies. So how do you do it all? How do you find kind of the balance, and still make it happen, which is very impressive. How do you do
We're still working on it.
it?
I'd say number one is communication with Peter, and it's still a journey. We're still working on, defining roles. Through the years, we've definitely discovered, what Peter likes to do in the business, what I like to do, and then offloading whatever we don't like to someone else. And so that's been a big help. But you just have to let go some of the things that you're just unwilling to do. Simple example, we recently found out, so in our area, there's a laundry service, and I used to pride myself in being able to do laundry because that's what my parents did. And, that was kind of like the culture, I guess. But it like seriously eats up maybe 2 hours a week, maybe more or less, depending on, what's going on. But we're able to offload that to someone else, another service to do that. And that frees us mental capacity to spend time with our families, which is more important, or even spend time with their business, whatever it is. But at least we're trying to find more time in our day in order to do more things that we want to do. And that's been a really big, at least cultural shift within our family. Another example, so HEB, Texas, it's a pretty big supermarket chain here. I know in COVID, they started well, you can order online and they'll take it out to your car. I resisted doing that because I actually found going through the supermarkets therapeutic in a way, but other times I did not. And so I was like, well, I don't like, people picking my vegetables, and I made all these excuses. And then once I kind of looked into it, I was saving maybe 45 minutes to an hour and a half every week. So it was just like little things like that because I wasn't open to it before. I was very resistive, but once Peter's like, hey, this would actually give us more time back. Like you're not, walking back and forth from, 110-degree Houston, Texas, Midland, Texas weather. And so just being a little bit more open to change, kind of being more flexible to the needs of our family, and just having just being more open to the possibilities is what really helped. And of course, trying to set up, doing all the business stuff, like trying to set up processes, trying to set up, what works. And end of the day, Peter and I are a team. And so whenever he may suggest something that I disagree, I just have to, remind ourselves like, hey, he's not coming from a bad place. Like he's coming from a positive place of intent. And so with that really leaves your mind open to the possibilities. So I think when you keep doing that, it just kind of makes life more fun. It makes the journey of doing everything more fun. But yeah, it's still a balancing act with kids, family, job,
Yeah. Yeah. And I think you're right. The way that you said it though is, stepping back and kind of saying, okay, we're on the same team, and, we might have differences of opinion and maybe things that we would execute differently. But it's like, when the two of you, when you kind of stop and say, you know what, wait, hold on a second, even though we're having a sort of an opposition of thought or approach or philosophy on this one thing, we're still very much on the same team. And so, let's at least evaluate whatever is being discussed through that lens. I think that's very important. And I'll also throw something in here. I'm in the DC area. I lived in Houston for 10 years. HEB is incredible. And so I don't blame you for kind of missing going through HEB, one of the best grocery store chains that I've ever been in. So, but
yeah, now I don't even miss going to it. It's amazing.
Yeah. Oh my goodness. Yeah, good. So, okay. So there's one thing that I wanted to talk about, and you actually have touched on this a couple of times, is overcoming barriers to success or perceived barriers to success. And so as a successful second generation immigrant family and a female minority, I think you have a very powerful story. So what can you kind of maybe share with someone who is listening to this, but let's say they have a similar history, so what can you share with them on ways to succeed in this space?
Yeah, so I would say maybe it's part of my upbringing, maybe it's kind of part of the female Asian, at least my understanding of what that should be. And I think when I grew up or when I was growing up, I felt that being who I am, I had to fit a certain mold,
Mm.
being maybe female, that the finances should be left to the husband because that's how it was set up in my household.
Mm.
Or, the male needs to make all the financial decisions and the female only focuses on the household work, which is why it took a while to get rid of the laundry and the grocery shopping for a little bit. It's different from, if you enjoy it, that's great. But if you don't, like, it doesn't have to be part of your responsibility. Like there's ways to work around it. And so that took a while, I would say more recently, for me to really be okay with, hey, I'm an entrepreneur. That label was something that I was not very comfortable associating myself with for a variety of reasons. But once I was able to break through that and say, it doesn't matter how my parents' generation grew up or how it was in our household. What matters is today and what I
Mm.
want to do and moving forward on where I want to be. And so for me, once I was able to break through that, I was able to really step into, the syndication, the multifamily, our company, and say, hey, this from a strategy standpoint, this is what we need to do. And I loved it. I love being basically the CEO of my life, the CEO of our company, and be able to have strategy discussions about where our life needs to go and where our company needs to go with Peter. Like it's such a different way of thinking from what I grew up. Because when you grow up in your environment, that's just all you know. Unless you're exposed to a lot of different things, that you're just limited on that, right? Unless you kind of start exploring different options. And so I would kind of give that advice. Like if you have this maybe little itch or you don't feel like where you are in life right now is where you want to be, you can always change it. It doesn't matter what your situation or circumstances. It shouldn't be held back. You shouldn't be held back because of that.
That's an incredibly powerful point right there. It's something that is challenging for people to fully grasp, but once they do, it's like once you see it, you can't unsee it. And we literally have the opportunity every day to wake up into a new reality. And again, it's one of those things that, like I said before, I went down sort of the path of personal development, personal growth, and all these things. I would have thought it was just a bunch of mumbo jumbo, and but the truth of it is you really can wake up and say, okay, here's who I want to be. Here's what I want to aspire toward. Here are the things I want to leave behind. I want to leave. Yesterday is gone. I want to leave them in yesterday, and I don't want to continue them anymore. And I want to start onto this journey toward success, this journey toward health, wealth, and everything else. And I mean that in a very practical sense, so for someone who maybe, if you've been considering getting into the real estate investing space and you want to start generating passive income, but the people who you associate with, they're very negative about it. And maybe they tell you that no matter what, you can't do it because of your profession or because of your background or something else. You literally tomorrow morning can wake up and say no more, and then pull up your computer and look on meetup.com or something like that. Find a local group in your area of people who are like-minded and who are doing what you want to do. Go to that meetup, and then off you go. So it's I don't want to simplify the complexities of our lives, but what you said is very accurate, Anna, that you really can wake up, or you really can just have a new existence. You just have to pursue it. Now it takes action and it takes decision. But there's no need to be stuck in the past. You don't have to live the next, month the way you lived the previous month. So it's just how it is.
Yeah, there's been some opportunities, real estate opportunities that we missed because we listened to people that we thought were experts, right? And there's just so much information out there, and you really have to filter out what you think is best and what works for you. But there's just and I still think about it, I'm like, if only. But but again, you learn from that experience or those experiences that you either missed, or maybe even if you did pursue something in a way, maybe you lost an investment, but at least it's still a learning opportunity, and you'll be able to do better the next time. So there's a lot of taking action is definitely important in order for you to move forward. But again, it's not really it's to me, it's not, what's important is not the end game, it's how do you get there. And so I think when I was younger, we kind of had this goal of, well, million net worth by whatever, right? I mean, that was Peter's goal, but I was like, yeah, sure, that sounds great, whatever. But if all you focused was that one metric and you never really enjoyed the journey to get there, I mean, what type of life is that, right? Like, there's more to life than that. And so, you had asked earlier about how do we balance all this other stuff. And yeah, could be, 20 things I need to do for our business. But when the little one asked me to read, Ariel for the 100th time, all right, let's read Ariel, so
yeah. No, that's right. I mean, yeah, it's the journey is very important, and certainly the vision and the goal is important. But if you're so focused on that you forget to enjoy yourself along the way, you get there and then you look up and you think, okay, now I'm ready to relax. But it's like, well, you missed, I mean, years and years of, of things that should have been important to you, that were important to your children. So yeah, it's that's a very important thing to focus on, is enjoying the now, enjoying the present, being present, and then certainly continuing to push forward toward your goal, but be present. I think it's just very, very important. And so on the topic of, I want to talk about building relationships, because you've successfully, raised capital like on a predictable basis for your deals. And so, I think that being a capital raiser is kind of one of the number one sought after skills as an entrepreneur, really. I mean, certainly as in this business, but just in general as an entrepreneur, if you can source and source quality capital and raise capital, it's a very powerful thing. But it comes from building relationships and yielding positive results for your investors. And so what tips can you kind of share on building intimate connections, genuine connections with your network?
I would say it takes time. And I think you have to understand the product. Like, what are you trying to communicate? And do you fully understand the risks moving forward, right? So, do you have skin in the game? Are you willing to put the money where, your mouth is? And so all these things kind of factor in, and it doesn't happen overnight. It's part of kind of like the journey, but you're setting yourself up for disappointment if you think, all your friends, all your family will put it in, right? But if you feel really strongly about something, your friends will see that. If your friends see that, or your community sees that, your logic is sound, then they will jump in as well. So to me, I think a good investment is based on logic. I mean, right, it's based on numbers and logic. So if you're able to explain what that sounds like or what that looks like, then it's a lot easier to maybe raise the capital or influence other people to jump in as well. There's a part of us as well. I think it's maybe 10 or maybe 20 or 30% of us that are maybe a little bit more emotionally connected to projects. And, if that's something that you're naturally inclined, you really have to work hard on the logic side to make sure that the numbers will pay out so that you do get the yield for your investors, because ultimately that's what counts. But if it's all based on emotion, oh, this is a great deal, I love it, you should jump in because we're friends, that's not going to fly at all.
No.
End of the day, no one's going to, give you cash just.
Especially not if you lose money on
Yeah, yeah.
it.
So it really depends on what your current skill set is or what you're naturally inclined. And if you're not really good in maybe the logic space, or maybe you don't understand the debt markets, or whatever it is, find someone that can explain it to you, or someone on the project team should be really strong in that space, so that, like, right now, the debt market, financial markets, is so volatile. But if you have maybe one or two people that are really strong in that space, that naturally love doing that, then they can provide better guidance for that project as things move forward. So you kind of want to be able to leverage your strengths, but also leverage your team, so that you can either communicate the right things or understand the project in a way that connects with your investors.
Yeah, absolutely. I think that kind of being able to have a clear, logical kind of approach and flow to what you're doing is important. And it's interesting too, though, that having an emotional connection to the deal. It's one of those things where, when we were talking about having a team, especially in the syndication space, it's like, sure, there might be some room for one of the members of the team to be sort of more about the story. But it's like you can't have everyone on the team can't be all excited about the story to the point where they forget about the mechanics. I mean, because the truth is, when you're trying to connect with someone and get them interested in the deal, there are a lot of people who are attracted to, okay, what's the story behind this? And if they trust you and there's a good story, you've done quite a bit of the work and required to get them very interested in it. But you absolutely have to have the nuts and bolts and mechanics, because you only get that only work maybe one time, but and then you get into the deal, and if it doesn't work out, that's it. And so, so yeah, I think that's an excellent point. It's like, yeah, feel good about it, but don't feel so good that you forget to run the numbers, and have a tight approach to it. Yeah, good. So I do have to ask. I mean, you're like I mentioned earlier, you're in the oil field, and for the benefit of the listeners, what do you do in the oil field? And I'm also just kind of curious to know what kind of corporate experience you've had that maybe has helped in this business.
Yeah. So my background is petroleum engineering, and so what I do is essentially help find or optimize the best way to get oil and gas out of the ground. Is kind of the short answer. In my current role, I actually do a little bit more development strategy, like, based on our numbers today, where should we go next? So that's my current job, which is a lot of fun. And from how does this translate to real estate? So, like I mentioned earlier, I love being able to strategize, where do we go next, kind of taking a step back, seeing the big picture. What's our 6-month view? What's our 1-year view? What's the plan? And so being very flexible in terms of kind of zooming in on the project, like, what do we need to do to succeed in the next month, and being able to take a step back. Are we still on the projection that we want to be? So to me, it's a lot of fun doing that. But kind of along those lines, one of the reasons why I re-diversify into real estate is because, we don't think that just having your W-2 or corporate job is sufficient, especially in this day and age, because I want to add a little bit more stability for our families, wealth, add a little bit diversity in our investment portfolio, because when you enter the corporate world, all you know is 401k. You might learn about stocks because of 401k, or maybe you were exposed to it in high school, because I know I did in economics class, but no one tells you about real estate. No one tells you about the private investments. And so that takes a little bit of work if you want to expand beyond, the bonds and treasuries and maybe the easy stuff. And there are financial advisors, but I don't think they tell you about the
No.
private investments, and they don't tell you about real estate, right? Because they want to make sure you stay in the stock portfolio, because that's where they make their money, essentially.
Mhm.
So you just have to, it's really just being aware of what else is out there and how are the rich getting rich. Like if you, I read an article earlier this year, and I don't remember the exact number, but basically the super wealthy people invest in real estate, and that's how they become wealthy, right? So if you're not in real estate, you might be missing some opportunities, because that's what uh, the wealthy people are doing.
Absolutely, and that's all over the world. By the way, there's a report that's literally called, I think it's called the World Wealth Report. I think is what it's called, but it's by Knight Frank, and every year they publish this report to see what what high net worth individuals and even ultra high net worth individuals invest in, and there's always like this almost 30% allocated toward real estate, with the vast majority of that being commercial real estate. So very important. And I like the point that you made about security. If you have a W-2, if you enjoy it, outstanding. You always have to have a thought for security, financially building wealth and these sorts of things. And what I like to share with people is, if you kind of think for a moment how good it would feel to work because you genuinely want to work and not because you have to work financially. Think about the headspace that puts you in. Then you get to fully and totally and completely enjoy, the people you work with, the projects you work on. Because, I'm not one of those people who, I don't bash, W-2 jobs. I think they're incredible. I think that you get to meet some amazing people. I think that the range of projects that you can work on are incredible, because you simply don't have the opportunity to work on the same level and scale of projects if you go off and do something on your own. You have, so it's just, there are all sorts of reasons why it makes sense to do it. But getting to the point where you have the option to do so is something that just is a beautiful position to be in. So that's one thing I like to share with people. And by the way, I mean, I one of the reasons I always ask, about people's profession, and if you have time in corporate America, how you're leveraging those skill sets, is because I think that it's very applicable. I think that the things that you learn in the corporate space, you have interfunctional or a multifunctional team based projects. You have large capital projects. You mentioned, because you're doing, it sounds like business development and kind of maybe some asset management or asset planning, field planning, right? And so having a vision for the long term goal of the asset, the value of the asset, with the decisions that we're making today, how that impacts the value on the street of the asset. So things that are very valuable, in this space. And so I just think that's awesome. And thanks for sharing that. So
yeah. Just to kind of extend on that. So, one of our, now this was a couple years ago, but I worked on one asset. It was just one particular project, but I think the project was somewhere between 20 to 30 million within, 1.5 months of work, essentially. Or maybe it was like 6 months to be exact, but 20, 30 million. And, that's kind of the playhouse that we're playing, and that was like a smaller scale. And so we kind of stepped back into real estate or commercial real estate, single family homes. The project scale is much smaller, right? Like a couple hundred for this, maybe at most maybe a couple thousand for a higher end project. And so being able to be very comfortable and working in the $1 million space is very transferable to the commercial real estate, because it's not like, ooh, 500,000. I don't know about that. And so it's makes it more palatable when you're working commercial.
It really does. It does. You're much more comfortable with understanding the scale and magnitude of those numbers, and also treating it with respect, as opposed to being afraid of it. Some people, when they come up against those kinds of numbers, then fear takes over and they say, "Oh, I don't want anything to do with that. I don't want to, handle people's money because it's too much money." But if you have that background and you're like, "Okay, yeah, we'll approach this in a way that's level-headed. We'll run some sensitivities, make sure we have the numbers dialed in," you're much more comfortable than stepping into a project like that. I think that's a very good point. So what's next for SuiteLife Multifamily? What are you guys working on at the moment? What's your direction?
So we're still underwriting. That's actually something that Peter enjoys. We're looking at deals weekly, talking to brokers, but still trying to look for a property that we'll be able to take a lead on. That's our ultimate goal. We're co-GPs on several other properties, but we'd love to step in and be more of a primary role in our next one. It's been interesting. The market is, I wouldn't say heavily saturated. That's not how it was. That's how it was maybe a couple years ago. But there's definitely some interest, and there are some opportunities, but we just haven't quite found the right one yet.
Yeah, no, you're right. I think this is definitely a good time to, ironically, I like to share with people. I mean, you all have a good bit of experience there, but I also share with people who are even maybe brand new to, maybe they've done some passive investing as a limited partner and they're wanting to switch to the active side as a general partner. I like to share with them that, right now, listen, this is a time to really focus in on those brokers and pick up the phone, start calling those brokers, start building those relationships, because they're getting fewer calls than they were 2 years ago. And so now's the time. Before they might have hung up the phone on you, but now they'll actually kind of talk to you for a little while. So for people who are newer, this is the time to start really focusing in on that, focusing in on getting your network warm, because when the action starts to pick back up again, you want to be well positioned to take care of that. So good. This is been incredible. So we're getting kind of close to close, Anna, and I'd like to ask, this is kind of the actionable tip portion of the show. So for someone who is listening to this and they're inspired, and they're ready to take action, maybe they've been hesitating in the past, but they're ready now. What's something that they can do to sort of take action now? And I'll say as a passive investor to get started.
Yeah. So, if any of my story resonates with the viewer or listener, feel free to connect with us. We're at SuiteLifeMF.com and love to talk more, see if, commercial real estate is the right path for you, or even if you want to pick our brains about single family homes or anything real estate, love to do that as well. But just really learning about what the opportunities are, how much are you willing to or able to put into a certain investment, and just being open-minded to that, and just continuing on. Like, let's just start at one point, and the more you learn, the more you're able to figure it out. There's a lot of opportunities there just to even understand or educate. So I know, Brandon, you have a good channel, so that's definitely one avenue there. But there's also conferences, there's meetups, like Brandon, your meetup, if you're in the DC local area, there's just a lot of opportunities to connect with people. So just keep trudging along until you kind of figure out what your right maybe tribe is, and just go.
Absolutely. Just get going. I like that too, to reach out, figure out kind of who fits really well with you. And I mean, that's how I got my start. When I was in Houston, I went to meetups and connected really well with people, and then started to invest in their deals. And that's just, it's kind of how it goes. You get a firsthand view of how, that potential sponsor, how they treat people, how they look at deals, how do they treat you with respect, all these kinds of things. So very, very important point. And so if I know you just mentioned, I think your website and email address, is there any other maybe channel or social media, anything where the listeners can sort of reach out to you and see more of you or hear about you?
Yeah, so we're also on Facebook and LinkedIn. Our LinkedIn is a little bit more active. It's at SuiteLifeMF.com as well. And we regularly post articles and different things for our network. And so we'd love to connect through there as well. And just looking forward to meeting more people.
All right, perfect. We'll put that in the show notes. And again, Anna, always a pleasure. Thank you so much for your time and for adding value to the listeners and to myself. Thank you.
Thanks.
As always, thank you so much for tuning into the show today, brought to you by Bridge Prosper. If you enjoyed today's episode and you'd like to learn more about commercial real estate investing, please like, subscribe, and share. And we'll see you again next week. I'm Brandon Jenkins, and this is The Capital Stack, where we help you learn, apply, and prosper.